Hello everyone, myself Vaibhav. In today's session, we are seeing the correction happening in the equity market. And if we look at the European trading session, most of the equity indices are trading lower, and the start has been similar for the US as well, where we are observing that the key three equity indices for the United States have started the day in the negative territory, and after this rally and the consolidation phase, I think some correction is pretty much expected on these levels where the valuations are already very expensive. I'm not talking about the trend reversal, but from a short to medium term perspective, we can indeed expect some sort of correction to happen, and this might be the start for this corrective phase. So let's see what's in store for us in the S&P 500. If we look at the data docket for the day, there were some releases on the economic front coming in for the other major economies as well, but we will not really go into the details. We had industrial data for the United Kingdom, and apart from that, I think not many major releases were there. Now moving on to the US session, we got the retail sales numbers, and for the month of December, in terms of month on month, there is decline of 0.7%, which is coming on top of the decline which was observed in the month of November as well. So here, this data is pointing to the green economic conditions in the US as a result of the raging pandemic there, and I think now that we have seen the rollout of the vaccination in couple of months time, most probably by the second quarter, we will see the better numbers popping up for the retail sales also. But still, on the year on year, the same numbers are looking much better, where the growth is at 2.9%. We also got the industrial production data, and here the role reversal is there. In terms of year on year, there is a decline of 3.6%, but in terms of month on month, the industrial production has gone well, and it has risen 1.6%. Moving on to the United States Michigan Consumer Survey data, and here we got multiple data points, and the consumer sentiment is also lower at 79.2 compared to the prior reading of 80.7. So the consumer sentiments have taken a hit as a result of the measures to contain the pandemic. The economic toll is pretty visible, and the accompanying data points are pointing to the softening of the sentiments also. Even if we look at the current condition reading, it is lower compared to the prior month, and a similar story is also being observed for the consumer expectations and business inventories as well. Now, let's see what's in store on the technical side of the spectrum. We will first see the S&P 500's technical outlook, and then we will also consider the USD JPY. Let's get started with the S&P 500's technical outlook. This is the daily time frame chart, and here this top has been made just about 3,800, and for last couple of sessions for most part of this week we have seen the range bound momentum in the S&P 500, and after the end of the day on the lower side in yesterday's session, we are seeing the similar sentiments playing out in today's session also, and as I said in my opening remarks, we are likely to see the correction, and on the technical side, I am expecting if the correction deepens, it might take the S&P 500 to the Fibonacci retracement levels of around 3690 or thereabout, and that should be pretty much expected. We also had this consolidation phase lows around the same levels, and if this time around also correction happens, we can expect the first support to come into play around this support area. On the lower time frame charts like 4 hourly, we have these resistance inside immediately just little above 3800, and here the S&P 500 indeed struggled to cross and hold above it, and now that we are seeing fresh breakout on the bearish side, I think we can utilize these first resistance as the marker while deciding whether to go short or whether to sit on the sidelines. I'm not talking about taking long positions, at least not for today's session, but we can indeed look for shorting opportunities anywhere closer to this resistance zone. Right now, the S&P 500 is trading around 3,779, and if we see some sort of move on the higher side of say 10 to 20 points, anywhere closer to 3,800, and that should be an excellent opportunity to look for fresh shorting trades, the short sale trades. If we look at the regression curve and the pivot point series, both are continuing to remain pointed toward the bullish side. But as I said, looking at this consolidation phase, narrowing of the range for the S&P 500, I am expecting the correction to deepen, and as I said, we can expect it to at least fall toward this support, the 3700 area. On the pivot point series also, we have the central pivot point coming into play around the same zone. And if we look at the regression curve, now that the price action has moved in the lower band, we can expect the flattening of the regression curve if it doesn't really breaks above this prior swing high. So if we want to target the fresh opportunities in today's session, I think these prior swing lows should be the excellent point to look for the optimum trading opportunity. Even in today's session, we saw these reversal happening fairly close to these price levels, and that's why I said that the price band anywhere of around 3790 to 3800 should be good enough, while keeping the stop losses anywhere in the vicinity of this prior swing high. So here we will have to take the risk of around almost 1 percentage point, and in view of that risk, we can expect more than 2 percentage point move on the lower side, as our targets are coming in around 3700. Even if we don't really want to wait till that, the risk reward ratio is still going to be favorable, even if we get out of the trade anywhere around 3730 or 40, at least 2 percentage point move should be looked at, and the risk reward ratio will also be in our favor. Now moving on to the currency segment, where we will first see the USD JPY. First means only currency pair for the day, and let's get to the work. Here we have this daily time frame chart, and after getting closer to the resistance zone, the USD JPY struggled to cross and hold above it, and we saw base correction happening of almost 50 to 60 pips. Now again it is showing some consolidation bias on the lower side, where it has found the support coming into play around 103.5, and for last 2 to 3 trading sessions it has consolidated well. Even in today's session, we are seeing some buying momentum on the lower side. So I think we can indeed look for buying opportunities where we can expect the retest of this prior resistance zone in the USD JPY. Looking at this possibility, I think the time is now to try to exploit this situation to our advantage. Here we have the USD JPY trading closer to this consolidation phase lows, and also we have the pivot point series central point at around 103.6. So both these technical factors are helpful and pointing towards our bias of bullishness might prevailing in the USD JPY. If we look at the regression curve has only recently shifted gears from bearish to bullish, and I don't really think that it is again going to change its course. So on that front also, we can be hopeful that this time around the USD is indeed likely to find buying momentum closer to this support zone, and it might again try to regain its lost ground and climb towards this prior swing high of around 104.4. So if that is what we are anticipating, then I think the price zone of around 103.6 to 103.8 is good enough to look for fresh opportunities to go long in the USD while keeping the stop loss anywhere below the 103.4 mark. That should be good enough, and also the risk reward is in our favor. The risk is of around 30 to 40 pips depending on how you figure out your entry point and then the stop loss. And as I said, on the higher side, we are expecting the retest of prior swing highs around 104.4 to 104.5. So we will be targeting almost 60 to more than 60 pips on the higher side while keeping the stop loss of around 30 pips. So the risk reward ratio also looks good enough. And if there is a break below this support zone, then it will be prudent for us to simply sit on the sidelines and not hang on to our hope of reversal happening. So this is going to be the crucial marker. As long as the price action is supportive of our view and it is holding well above this support zone, then well and good, we can continue to look for buying opportunities. But unfortunately enough, if there is a break on the lower side, then that will be the time for us to pack our bag and leave, meaning we should be getting out of the trade and simply sit on the sidelines till the clarity emerges. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback section and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Do subscribe to the Decoscopy webinar channel. Have a good day and weekend. Goodbye.